Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me are Joe Tigay, Managing Partner and Portfolio Manager at Equity Armor Investments, as well as Luke Rahbari, Managing Partner and CEO at Equity Armor Investments. We're here to discuss the latest jobs report and what it means when the market is higher, and so is the VIX. It is great to see the both of you. Welcome back to Trade Talks. Luke, let's kick it off with how you're interpreting the jobs number this morning. It was a great report. There's really not much else that could be said about it. So the question is, perhaps was the Fed too aggressive in 50 basis points at the rate cut last month?
Yeah, nice to see you again, Jill. Thanks for having me. The jobs report, I don't know. I mean, which job reports do you want to talk about? This number that just came out or the one they're going to revise in a couple of weeks or a couple of months? Every jobs report, it seems like it's been revised up, down, whatever. So it's hard to interpret these numbers. But if you go by these numbers, they were pretty good. Does that mean that they can lower rates? I don't think so. I don't believe the inflation numbers. I always thought inflation was a lot more prevalent and stickier than what the Fed thought. We've been saying that for 2-3 years. I think maybe it hasn't gone up as much. But it's still very high on a relative level. So can they lower rates? I don't know. And these job numbers, it depends on how much service jobs. I think anyone who's got anyone who's got is around my age and looking for a job, they're having a real problem. If you're talking about lower wage jobs, I think there's plenty of those open. So I think it's a bit of a mixed report.
Yeah. And Joe, that's a great point that Luke makes, because we have seen significant revisions month after month, and there is always disparities between the different jobs reports that are out there. I think another question that's fair to ask is, did we get the 50 basis points so that they wouldn't have to cut in November, the day after the election, right? That kind of removes that, political view out of the calculus as well. I think it's more, I feel like we're feeling it more from an inflation perspective than necessarily jobs at this point.
Yeah, it seems like for me that the 50 basis point cut was very aggressive. But they were more on the line of growth. They did not care as much about inflation. It seems like growth is going to be doing fine if this jobs report happens to be anywhere close to being okay. So they're more on the lines of normalizing their target rate, getting it closer down to inflation. Not that inflation is at their target rate yet. So they had a couple of things working for them. They had the inflation going towards their target rate, had not yet met their target rate. Unemployment rate going up against their target. So I think they got aggressive ahead of the growth. We talked about this last time I was with you with Mike Kuo, the mid 90s or 2007, the mid 90s when they cut, late 90s when they cut. We were looking at a situation where unemployment was just starting to rise. And they decided to cut, and we saw 2 more years of accelerated returns. 2007, unemployment was starting to rise, and maybe they cut a little bit slow, and we saw a big turn down in the economy.
Yeah. And so, Luke, how do you interpret it when you see, stocks trading higher? It's been on an uptrend, but then we're also seeing gold sitting at significantly higher levels as well.
Yeah, so stocks are higher, volatility is higher. What we believe is going to happen for the rest of the year and even after the election is it's going to be higher volatility. Now, that doesn't mean that the market can go down, that the market's going to go down, but it does mean that I think we're going to have a lot more back and forth and uncertainty. No matter who gets elected, you still don't exactly know. There's a big difference between what they say and what they're going to do. With President Trump, he put a lot of tariffs on China. When President Biden came in, he kept those tariffs and maybe added to them, right? So that was in the rhetoric before he was elected. So we got to see who gets elected. Then we've got to see what they're really planning to do and what their plans are. And I think that calls for uncertainty. That doesn't mean that the market could go down. I think you've got to be invested, but you've got to be hedged because certain things can happen. And as far as gold is concerned, it's really the old story about gold. It has been uncorrelated. Inflation is higher, and it has been a safe haven. And unfortunately, some of the cryptocurrencies and Bitcoin, obviously, it's just been acting exactly like the Nasdaq or Nvidia, pretty much, right? So it's got a very high correlation to the market, and gold has not had that, and it's had a pretty decent year, obviously.
Yeah, and we spoke about this last time with Mike, Joe, that it's not necessarily who is in the seat, right, in terms of the presidency. It's really the composure of the House and the Senate, whether there's a mix or it's all Republican, all Democrat. That's really what's going to determine how policy looks. And to Luke's point, it's hard to discern that. And, being on the campaign trail and what you're saying versus what gets executed in office can be two very different things, tends to be very transactional.
Absolutely, and that's just one of the areas of uncertainty that investors have to deal with. And you brought up gold. I think that's one of the reasons why it's had such a fantastic run. Yes, people are using it as an inflation hedge, but they're also just kind of parking dollars in there rather than the U.S. dollar. That are looking down the road, saying, "I expect the Fed to be cutting more." They're not going to want to own dollars right now. They're not going to want to. They're thinking about a weakening U.S. economy, so they're going to want to park it somewhere. Gold has been the spot traditionally that's happened. So when people are pricing in inflation, looking at the government, no matter who's in charge, it looks like the spending is going to continue, the debt is going to continue. So people are looking at gold and saying maybe it'll be a slowdown, but inflation will be happening.
Yeah, Luke, let's switch gears and talk about emerging markets for a moment, because the markets really did take a cue from policy out of China this week. And of course, India has been a hotspot as well, as consumer demand continues to grow, and it's just been showing areas of growth in general.
Yeah, so I don't think it's anything new, but with the tariffs that happened with China and what happened with COVID and the manufacturing, et cetera, there's been a lot of people, rather companies, not only in the US, that have switched over and trying to move manufacturing and other things over to India from China. So that's one big thing. A few years ago, when I was in India, you'd be surprised to hear that some of the biggest investors in India were the Chinese.
Mhm.
And the Chinese banks were coming in there, and some of the private equity guys, because they were already see that trend. So yeah, emerging markets, obviously a place to look at. You have to be careful how you play them, because with emerging markets, even if the equities look great, you really got to be concerned about their currency and also their bond market. It's not great if the emerging market is up 20% and the currency is down 50%. Not a great way. So right now, I think the best way to play it is 50% of the S&P earnings, or even the Nasdaq, as you know, which is a biggest part of the S&P, come from overseas. So right now, why not go with the companies that are doing the most amount of work there? Let them hedge the currency. They have better see-through, obviously more than I do anyway. Google, Amazon, Microsoft. I know they're the same names, but you're going to get emerging market exposure from them. You're going to get very good risk management from them, and you going to get someone who's going to be invested for the long term. I don't necessarily need to go pick out like Adani, like in India, or one of the steel makers. I'll let Microsoft and Amazon do that for me until I get a better view after the elections. And then I might go into single country or single stock within a country. But right now, I think that's the way to play it.
Yeah, and that's a great point, Joe, that Luke makes, is you can't look at emerging markets simply on valuation alone. I mean, even if you want to talk about domestic markets or other Western markets, I mean, there's more to it than just valuation. There's a number of underlying factors that need to be factored in as well.
Yeah, and we saw it for basically 4 years before this recent China stimulus, the capital crackdowns, very tough policies from the government in China. So for me, that's really weighing heavily into my decision. And I'm just like Luke saying, we're seeing major companies pulling out of China, going into India. I think a lot of the U.S. companies are much better for me to look at. I have a lot more confidence in them doing the investing than me. So I'm 100% with Luke on that trade.
All right, Joe, let's switch gears and wrap up here looking at the options market. Tesla, of course. What's happening? What are you guys looking at in the option space?
Yeah, exciting event coming up. Their chart's having some trouble kind of getting above like this 250 area. They've been struggling here all year. Really have not had the same Mag 7 gains this year as some of their peers. A lot of talk has been about coming out about them. They had a recent recall on the Cyber truck. But a lot of activities going into that name. Should be a very fascinating event for me. The chart looks like it would love to get above that 250 area, break up to 280. Certainly could be possible, but it's just had this struggle to get above there. And maybe this catalyst could be something that could do it. We'll have to wait and see how it actually plays out.
Right. And Luke, to wrap up here, if we take a look at the straddle, what is the options market implying in terms of the magnitude of the move?
Yeah, I was just looking at that. So the money strike is 250 because the stock is trading around 249 and something. So to buy the call and the put, which is to buy the straddle, you're almost looking at $21.50. So the options market is implying, since earnings is next week, that after earnings come out, Tesla will have a $21 move either up or down. And the other thing you've got to remember with stocks like Tesla, Nvidia, some of these other big ones, there are other ETFs now that give you double leverage down, double leverage up. So after the number comes out, you see some wild swings. But then the next day or the day after, it kind of settles into what that number means in terms of the balance sheet, in terms of the PE, in terms of the forward guidance, et cetera. But this is going to be a volatile, I think it's going to be volatile after the number comes out. So I would keep a close eye on it. And, you know, I hate to be short the straddle on big stocks like this when they have earnings. I'd rather just take a chance on buying it and hoping for a big move rather than saying I don't think it's going to have a big move.
Yeah, it is tough to be short options positions with that type of move that's expected. But Luke, to put it into context, right? $21, yes, it's a big move from a capital perspective, but when you think about it from a percentage perspective, overall in the options market, that's still an outsized move relative to other moves that we see when it comes to.
Yeah, I mean, if it's a $250 stock, a 10% move is $25, right? So it's saying about 8% move or whatever. But if you look at the last few times that Tesla's had earnings and see what the percentage movement was, you can say to yourself whether you want to take a chance on this or not. I don't think the day after earnings or the stock right after earnings really reflects what the fundamentals of the stock are. This is a more of a trade rather than an investing move, I would say, if you're gonna play the earnings week.
All right. Appreciate both of your insights as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.